Welcome back to the Dividend Diplomats YouTube channel. You got Bert and Lanny, the DD here, coming to you here on YouTube to talk to you guys about another 3 stocks that I'm looking at right now here in December of 2020. To finish off the year.
So we're talking about everybody. But before we tell you about these 3 stocks, let's smash the heck out of that subscribe button down there. We're going to give this video a nice thumbs up. Everybody, let's get together. Let's reach financial freedom. In case you're wondering, Lanny's not drinking a natty daddy. We put in that one video, he had to get to 500. By the time it got too far along, I think we got to like 490. It was close. It was very, very close. We're going to take a break from that challenge, though. We'll probably refresh it in a week or so. We'll come back to it. But so no natty daddies are on the line here. All we're talking about are 3 potentially undervalued dividend stocks to buy, especially ones that Lanny's going to be keeping his eye on for the rest of December.
Guys, if we get 200 or 100 likes, Bert and I will at least crack some Christmas beers.
Cool. Yeah. Yeah. Nice heavy. That's fine. We can do that. 400. We'll get a nice Christmas ale here.
We'll get that going. We'll get that going.
All right. So what's happened in the last week here in the S&P 500? Let's talk through it. We entered the week with the S&P above 4,000. Now we're back below. The S&P 500 finished at 3934.38. Market just still can't seem to figure out how exactly they're processing the inflation news, all the updated metrics. And as new companies trickle out updated guidance, it seems to be causing a little havoc, and the market gets a little confused, some days up, some days down. Everyone's just waiting for that breakthrough economic data or that breakthrough statement from Mr. Powell himself.
Guys, yep, Powell is about to speak here December 14th. Expect a 50 basis point increase. You know, I don't know, Jamie Dimon and other bankers are also calling for really big recession news. I think Elon Musk even tweeted if there's another 50 basis point increase, it's going to really send the economy downward. All I know is this, guys. Keep buying when stocks are showing undervaluation right now in this market. And as Bert alluded to, the whole entire stock market, or the S&P 500 at least, was down another 118 points this week, cracked again below 4,000. And actually, you know, at one point was tipping at around 3920. But, you know, we'll see if it cracks below 3,900.
That's why we stick to our metrics. We're always looking at stocks the exact same way in good times or bad times using the Dividend Diplomats dividend stock screener that has 3 metrics and our famous bonus metric. Number 1, price to earnings ratio less than the S&P 500. 2, dividend payout ratio less than 60%. 3, dividend growth history and an average dividend growth rate. And 4, that big old fashioned bonus metric is the dividend yield. So that's what we do every stock. And that's how Lanny found these 3 stocks that he is going to buy. Lanny, do you want to kick this off? You want to tell us about that first company?
Yeah, let's kick this off because we got 3 stocks, guys. And I apologize too. I kind of don't have a voice. My throat is sore, so I'm drinking just lemon, honey, tea, and ginger. So just
don't let it happen again, Lanny. Do not happen again.
So we'll try to get through these quicker.
Yes.
So the first stock, which I've been buying, and everybody knows I've been buying this stock, is United Parcel Services. Ticker symbol is UPS. We still have a few weeks to go into this holiday season. You best believe that UPS is going to be charging their nice, lovely shipment premium, delivering the goods all across the country, the world. You know, recently they're still trading in the 170s. Gosh, I need them to crack below 170. That would be awesome.
It would.
But they're down about 17% this year. They're trading at $177.64, Bert. And I mean, when you look at these metrics, they really scream a stock to buy right now.
That's right. So we can start hitting some of these quickly here. That first metric, the price to earnings ratio. Their price is 177.64, EPS 12.26. That's a PE ratio of 14.49. That second metric, the dividend payout ratio. Annual dividend is $6.08. That gives you a payout ratio of 49.59%. It's about as perfect as you are going to get in that 40 to 60% dividend payout ratio.
Perfect payout ratio, guys. You know, UPS doing really well in revenue and profits right now. And they should be doing well, depending on what their oil and futures, if they were playing that game. but oil
Let's
is
see how
coming
good
back.
their CFO and capital markets teams are, right?
Want to find that out. Yeah, we'll find out very soon come this fourth quarter or this next quarter earnings release. They've been increasing their dividend for 12 straight years. This past year with a 49% banger. The average rate of an increase is about 6.5%. I like that out of UPS, pretty consistent. Again, year to date down 16% since last year, down 16% almost as well. The yield has now crept up to 3.42%, so about 2 times the S&P 500 right now, and still, for the most part, higher than most online savings accounts.
So let's summarize UPS's metrics here. PE ratio 14.49, perfect payout ratio of 50% when it's rounded, 5-year dividend growth rate of 6.41%. They've increased that dividend for 12 plus years. They are halfway to becoming a dividend aristocrat, just about. They will be when they increase it in 2023, with a yield of 3.42%. I'm liking it. I see why it's on your list. Now let's move to number 2, Lanny. Let's see, who is that
Number
second
2.
company?
Well, I mean, just a frame of reference, UPS has about 153 billion in market cap. So we're going to go down to about a fifth of that here with Kroger. Ticker symbol is KR. Yes, the grocery store chain down here in Ohio and in the Midwest, as well as they're trying to close on the Albertsons. Big deal right now. So obviously a lot of cash. The combination is going to take up a lot of resources from Kroger.
Yeah, nice price point of $24.6 billion transaction there for Kroger to acquire Albertsons. That is an interesting move, though. They're just taking over the grocery space.
Yeah, not a cheap acquisition, but hey, sometimes you gotta acquire to grow, as well as gain some intangibles right there from Albertsons, with their reach. Obviously, Kroger's not cannibalizing their own market geography, so they're really stretching it out now.
I wonder if they'll be selling Goodwill at their store.
Oh, funny.
Yeah. Yeah. All right. So the question is, with the acquisition, with the stock's performance, I wonder, how is Kroger performing in our dividend stock screener? There's only one way to find out, isn't there, Lanny?
There's only one way. Let's run them through right now, guys. They are actually up year to date in their stock price. They're actually up about 3% this year, 4% in the last 52 weeks, trading at $46.47. Current EPS is $4.22 on a go forward basis. That price to earnings ratio right now is looking real solid at 11 times forward earnings.
So how about that payout ratio? $1.
How about it?
How about it? Tell us about it. Tell us about it. All right. $1.04 dividend. Divide that by the 422. That's a very light payout ratio at 24.64%. With that, you'd probably expect some pretty strong dividend growth, wouldn't you, Lanny?
Oh, no doubt about it. And that's kind of what they do. That's what KR does. And the reason why also this stock caught up on the radar is they're down about 9% in the last 6 months. So they're up this year. The last 6 months haven't been the best for Kroger. So that's why it's really kind of coming back to the watch list. Obviously, if we go through a recession, people are still going to be buying food and eating food. And where's one of the places that sells food? Kroger.
Yeah, that's right. Sell gas too. Still need that. All right, moving to that third metric, 5-year dividend growth rate, 13.98%. They've increased that dividend for 15 years, so they're a decade away from becoming a dividend aristocrat. Let's move into that bonus metric, the dividend yield. Yield is currently 2.24%. Not the best, not the worst, still beating the market, which is one of the big things we're looking for when we check out the yield.
Yeah, keep in mind, Kroger's last increase was about 24% to the dividend. So yielding over 2% kind of makes that okay.
Mm-hmm. Yeah. Now, the one thing I do want to think about with Kroger, with how expensive this acquisition is going to be, I'm thinking the dividend growth might be a little slower for the next few years. We've seen that with other acquisitions. Take on some debt, take out some debt. Companies will focus more on cleaning up their balance sheet a year or two after an acquisition and bring down the dividend growth. Not to say it won't ever return. I just wouldn't expect a 24% dividend increase going forward like they did last year if they go through with the Albertsons acquisition.
There you have it, guys. So again, in summary right now for Kroger, again, 33 billion by market cap stock, 11 times price to earnings ratio, a low payout ratio of about 25%. dividend growth for over 15 years at an average rate of over 13, almost 14%. Dividend yield is 2.24%.
Let's move to number 3. We're changing sectors here. We're going into the technology sector. Cisco, ticker symbol CSCO. I love that this stock is back on your watch list once again, Lanny.
They're back. They're about 199 billion by market cap company. So by market cap, the biggest one out of these 3 stocks. And, given, I'm sure at your workplace too, I know at my workplace, whenever we do anything new from an infrastructure on an IT standpoint, Cisco is almost always involved. If not, I've never seen them not involved in terms of router and exchanges, et cetera, et cetera. So I always see their equipment come through the invoices.
Yeah, and that's what makes Cisco so special, and that's why so many people love them. It's hard to swap out Cisco from your company's infrastructure once it's in there. It's a really big pain, and they're very good, and they offer all the services you could need. That's what makes them special. People may pick other ones, but there are a lot of companies that just rely on Cisco, hands down.
They're down about 23%. So as we run them through the Diplomat stock screener, they're trading at $48.46. Gosh, I should have bought more when they were like in the low to around $40 earlier this year. Analysts are projecting about $3.83 of that price to earnings ratio, that first metric, currently trading at 12.6 times forward earnings.
Their annual dividend is 152. That gives you a payout ratio of 39.69%. Right on the very low end of our perfect payout ratio range. Their 5-year dividend growth rate, 6.05%, and they've increased that dividend for a decade. So also building and working on a very nice dividend streak there, especially in the technology sector.
Real solid here. I mean, when you think about Cisco, just real solid across the board with now a dividend yield of 3.14%, because again, they're down 23%. So you've got a 12 times price to earnings ratio, a barely 40%, not even 40% payout ratio, growing the dividend for over 10 years at an average rate of 6%. Not a bad play right now in these current economic conditions.
Yeah, so we'll put the chart up with all 3 of them here. We're not going to rehash all of the metrics. These are 3 great stocks. Again, UPS, ticker symbol UPS, Kroger, ticker symbol KR, then Cisco, ticker symbol CSCO. I love those tickers this week. So Lanny, just give us your gut check. Rank them 1, 2, 3. What's your gut feeling entering the week?
It's the rank as you see them, as we went through them. UPS, Kroger, KR, Cisco, CSCO. Would like UPS, if they were able to crack again below 175, get closer to 170. Kroger would like them in the 45, sub 45 range. Cisco, give me in that same range too, 45-ish below.
Excellent. Love it. Everyone, let us know what you think of these 3 stocks. And if not, what stocks are you watching? Are there any other dividend growth stocks you want us to analyze here on this channel or throw up on our Twitter feed? You guys let us know. We appreciate all of your support so far. If you haven't already, you know what to do. Subscribe to the channel. Give this video a thumbs up. Get us to 400 likes so we can drink that Christmas ale. I'm not looking forward to that. So
400 likes within the first 72 hours. Let's make it happen. Come on,
Yeah.
Let's go, guys.
Deal. All right, everybody. It's been another great week. Let's keep pushing, keep working our way towards financial freedom.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.